All right, so let's look into some things, because when the market is down, it's a good time to actually sell some put spreads, or sell some naked puts, or rebalance your portfolio a little bit by putting on some things that's not going to require any buying power. That's probably going to help you if the market continues to go down, which we do not believe. So we'll be vigilant if we put on some call spreads this morning. So in this account, we have this NASDAQ position that we are looking to potentially roll up, even though we do not have to do it. Let me just show you this here. And after we do this, we're going to put on a new trade in the Russell. Okay, we're going to put on a new trade in the Russell, selling a put spread and hedging that. All right, so if we bought this back, and then if we roll this up, and I just see how far we want to go up. Let's say we wanted to go up to the 16 delta here, this 13,900, and I believe it's 60 points wide. So if we keep this 60 points wide and we go down to the 13,840, that'll be 60 points, and then that would give us a $75, additional $75 with the buying power effect at 71. So if we try to do this on the TastyWorks platform, we will get rejected. So we'll tell you how we have to do that. Look in this area, everyone. In a second here, you'll see once we send this that we're going to get rejected. And you see right there, we just got rejected on that. So what we have to do to be able to do that type of trade, we're going to have to take this one off first and then put it back on. So this is what we're going to do. We talk about this in course 1, lesson 7. The second video talks about how you can adjust trades on options on futures using TastyWorks, how you can do a small adjustment in concert, how you can do a large adjustment in concert, and then anything besides that, then you're gonna have to take off and put back on the way you want to do it. All right, so we're gonna buy this back here. I'm gonna send that, and of course they're not going to fill us right away, even though this NASDAQ, it looks like it's pretty close to its lows. The low is 14,803. It's at 14,808 right now. So we're going to bring this up just a tiny bit, and we're going, good. They filled that. All right, so that's hit clear. And then now let's go back. Let's go to that 13,900, and I'm just rolling this up into strength, meaning that the market, the NASDAQ is going down, and I'm rolling these calls up because we've had a problem on the call side. These puts up, rolling these puts up because we had a problem on the call side for several days. So now we're just taking advantage of that. So this is a great time to make adjustments, fix things that were potentially causing a problem in your account if you can, right? So I'm going to do this, even though this is really far away. This trade is I'm going to actually bring it closer to the money, and because I do not believe the NASDAQ is going down too much more. And if I'm wrong, I'm still going to be okay, because I'm really far away from what it's currently trading at right now. All right, so I'm more than 1,000 points away, or very close to 930 points away, basically, from where it's at right now. So this is the trade. We're going to put this, we're going to have to drop this down, unfortunately, to the 6.00, and we got filled right away. I'm going to show you this really quickly on this history. And so this is the history here. We collected, let's say, about, let's say it's $8-9. We collected about $61 after fees and commissions to kind of gain a little bit more premium, reposition the trade a little bit, because yesterday this call side was a problem, and it's been a little problem. So we're not going to touch that call side though, because that call side right now with 24 days ago is outside of the expected moves at a 13 delta, which is our green zone. So we're not going to touch that. But now we're going to go into an RTY trade. I sent out some trade ideas this morning, and so let's go over a few of them and try to put on a trade. I want to put on a trade in this R2Y. We have 31 days to go here. Let's see what the trade that I sent out on the call side. We were selling the 2370. It's down significantly more than what it was at that time, but volatility has increased, so it might still be a really good trade with 31 days to go. 2370, 2390, I think we were buying that. All right, so that still meets our criteria. And then we're going to go down to this put side and sell the 1940. put, which is way down here. That's at 11 delta, and buying the 1900. So 40 points wide on the put side, and 20 points wide on the call side. So there we go. And then we were talking about at least 380. It's trading for 315. So this actually works well for us. So we're going to put this in, and we're going to see if we can get filled. And this is going to be the trade that we do. And then we're going to hedge this on the, I'm betting this, the Russell's going to go up. So we're going to hedge this on the call side. So I really like this trade. You can see we're getting way over 12% of what we, on our buying power. So we're going to bring this down a little bit. We're going to take it down to 410. We're going to try to get filled. So 191, let it sit for a quick second. And all right, so haven't got filled. If we move this down to 4, we should get filled right away. And we could wait, but for demonstration purposes, I don't think I can go to 405, but we're going to check. All right, so we could. Okay, awesome. All right, so we got filled on that. So now we're going to go hedge. And I know the Russell's down right now. I'm betting that it's down a little bit too much recently. So we're going to go to the same expiration in the IWM. We're going to go to 31 days, and we're going to hedge the call side today. So we should be able to get a decent, we'll see, it's kind of elevated, but I think we should be able to get a decent price for it. We're going to go to the 30 delta. We're going to buy this. We received $191, so we can use up to 30%. We're not going to use that much. We're only going to use just way under 30%. So we're going to buy this one here at the 33 delta, and this is going to hedge us $100 because we're not buying this, we're financing it. We received over $191. So we're going to send this, and let's see, I'm actually going to delete that, cancel that for a second. I'm going to go over here. I'm going to go back to this. I'm going to do the 28, and we're going to sell this 28 here. That's going to give us it's going to be a tiny bit cheaper, and they're not going to fill us right away. So we're going to go to 32, and let's see if they'll fill us right away at 32. All right, after fees and commissions, about $34. All right, so perfect. So we got our call side hedge on. We consider this a yellow highlighted trade with this R2Y right now. All right, so let's, I'm gonna open it up for some questions here in a second, but I wanna go over a few other things. Let's go over here, and it's the same kind of concept in this account. We're actually gonna sell some, we're going to go into this R2Y. This is our bread and butter account, one of our demonstration accounts. We're going to go into this R2Y. We're going to look for the 24 days. It's the position we have on here. And what we're going to do is sell some calls. And the reason why we're going to sell some calls is because our put side is at a 28 delta now, because we rolled that up a little bit yesterday, and that's fine. But today we got 4 on the put side and only 1 on the call side. So we're going to actually add a couple more to this call side, and we're going to see if it gives it to us for no buying